The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got 24 minutes to go until the start of trading, and you got markets in positive territory to kick things off. We got the S&Ps right now. We were slightly lower last night, about 10 points or so, and we're positive by 10 to kick it off right now. S&P is positive by 10, trading at 56.30. NASDAQ 100, we're positive by 38 points, trading 19,847. You got the Dow up by 65 points right now, above 41,000 in the futures. And we got the Russell up by 11 points, trading at 2163. Bitcoin just under 60,000, 59,735. You got crude right now chopping around near $73, 73.67. We did get a 72 handle briefly overnight. We're back above 73, 73.66. All the talk about gold recently, deservedly so. It is interesting. If you were watching the program yesterday, I was chuckling kind of a little bit last night because I came on the air at 9:30, 24 hours ago almost, right? And I said during the program, first time ever, gold's traded at 25.70. First time ever on the planet. You're living it right now in this moment. And then we traded lower. But all things considered, a series of higher highs and higher lows in gold. Gold breaking out of the consolidation in the beginning of August. That consolidation area building for a period of almost 4 months there. And you see the run we've had. We're trading at 25.50 right now for that gold contract, flat right now on the session. Notes and bonds. The trend is continuing here. And it is remarkable how we get rip-roaring rallies in one way or the other, and then gradually the move will occur anyway. And I say that as in we're getting higher price, lower yield. Regardless of the negative action that we've had, the trend is higher price, lower yield, and we got the 10-year yield at 3.8%. How about that? 3.8%, the yield on the 10-year. Where's your real rate of return if you're locking in 3.8 for 10 years, man? And what is that saying about the economy? Well, it's saying that we got some slowdown coming right now. If you think about where the Fed is for short-term rates, right? If you think about where the market is expecting, and I'm pulling up the yield curve as I talk about here in terms of where we will be, but you take a look at this yield curve in terms of where we are, you get the 2-year right now. How about the 2-year? Under 4%. Folks, for some context here, your money in a money market right now is getting about 5.25%, just above that probably. So if you're getting 5.25% by leaving your money in a savings account, and they're only willing to give you 4% to lock it in for a 2-year, where is the risk there? Well, the risk is that, yeah, we're going to get a dramatic cut of rates, because if the Fed is just going to 4% over the next 2 years, then why would you take 4% for the entirety of 2 years if you can get a guaranteed rate of 5.25% right now? Well, no, that's not where the market's saying. The market's saying that it's actually going lower than 4% right now if you're locking that in terms of getting that number. Pretty remarkable. We'll see where we go. But the Fed is going to begin in September, and we'll see where we go from there. You jump over to the dollar index on the heels of lower yield. This is the big one, man. You talk about it. The dollar down to 101.42. We're technically flat right now on the session, but talk about a slide yesterday all day, right? When I was doing the program at about 9 o'clock, we were chopping around at 101.70. We went to 101.31 overnight, and you see the action even this morning. Since about 7:30, you got the dollar down another 15 pennies. We're trading, and it would make sense, man. We got the 10-year at 3.8. Are we going to be at 3.5 on the 10-year? That's where, what's it going to take to be at 3.5 right now versus a little bit of a reverberation where we might get back up to 4.1. We're sitting at 3.8 on the 10-year. Where's your risk? And there's, the market prices things equally to a certain degree. But as traders, is there an equal risk right now that the 10-year is going to go to 3.5 as there is that maybe it pops back to 4.1? I would say there's probably a higher likelihood right now that the market might be getting ahead of itself a little bit with 3.8 on the 10-year. But cuts are coming. How fast they're coming and how deeply they're coming is the question that we're going to hit when we get into September. There's your dollar index. We jump over to the VIX as this market just plows higher. pretty interesting that we got higher prices when not really a huge reaction yesterday. I mean, what was the S&P down? 10 points, right? And look at where we were from the beginning of the day of 15 to a 16. We're trading at 16 right now. In context on the S&Ps, we're almost right back to where we were at the beginning of the session, right? So check that out. 9 o'clock yesterday, pre-market, we're trading at 56.30. Today we're trading at 56.30 in the S&Ps. We got some volatility in between then, but then you jump over to the VIX, and the VIX at 9 o'clock yesterday was trading at 15, and today we're trading at 16. Same exact price in the index, and the VIX is up a whole point. What's that mean? There's some fear in this market, man. They are paying up for premiums for insurance to protect themselves in this market, even as we stay at the same price point. Normally, you have the S&Ps trading lower, the VIX goes up. Well, you can see we chopped around a bit, but we're at the same price we were yesterday at 9 o'clock, and the VIX is up to 16. So pay attention to that one for sure. Excuse me. And we're going to talk to our man Teddy Cakestad at 40 past the hour, as we do every Wednesday. And it'll be a great conversation because, man, we got yields in focus at 3.8%. We got crude sitting at about $73. And we get that gold contract pushing highs of $25.50 this morning. Gold down by $2 on the session. But, yeah, gold is on fire, man. If you haven't checked out the Gold Report, folks, great time to do it. You can check out my dad's weekly Gold Report. He just put out a new issue with new recommendations just yesterday. So don't think just because it's Wednesday, all right? He just put out a special update yesterday. I believe there's new recommendations in there, so you can check that out. You always get access to the archives. Every newsletter comes with a 30-day money-back guarantee. And don't forget about Larry this Friday during the main event of the week, Jackson Hole, Chairman Powell speaking Friday, 10 a.m. Eastern Time. And Larry will be live trading during that going on. So you can expect that's going to be a special class, man. You know, that's going to be a special class. And I encourage you, if you haven't checked out Larry's live trading Fridays, check it out ahead of this Friday. You get 2 classes a month, all right? So if you sign up ahead of this class, you'll get the first class in the next month as it works. You recur every 30 days. You can still cancel anytime. But yeah, that's going to be a special class, man. Live trading Fridays with Larry Pesavento during the Jackson Hole. I expect some volatility in one way or the other, and we'll see where we get that volatility. Just for some context here, you take a look at the SPY, okay, in terms of the price that we're looking at. The SPY is trading at 558, okay? We're trading at 560 basically in the pre-market right now. Now, these are daily options, okay? So you got to look at the August 21st, August 22nd, August 23rd. Here's your Friday action. You want exposure through Friday, you're looking at $6.57 in either direction. Not really that bad, right? The VIX is only sitting at, 16 right now. So not too much, but it is interesting that you can get a bullish or bearish put or call at the money. Now, this is as of the close yesterday for about $3. All right, and that's exposure through Friday. Not an outlandish amount of volatility priced into this market when you think about the swings that are possible with a speech at Jackson Hole taking place and with the type of volatility we've seen in this market, right? In terms of the S&P trading down, dramatic, man. Yeah, even just if you zoom in from where we were to begin August, okay, not even taking, as we come into this first break, not even taking the cherry pick all-time high of 565. If you just take the volatility we've had since August 5th, okay, the beginning of August, market trades down 8.5%, and we're now up almost 10%. That is some volatility, folks. We'll come back. We're going to talk some earnings. How about Target, man? They are up $22 right now. They crushed it. We'll talk some Target. We'll talk some TJX. We'll talk some earnings. Don't go away. We'll be right back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
There's no better time than now to sign up for Live Trading Fridays. Why is that? That's because the next trading session, this Friday, August 23rd, coincides with Jerome Powell's Jackson Hole speech. Chairman Powell's comments have the power to greatly move the market, and Larry is ready to capture those gains on the moves. Use code LarryAUG24 at checkout to save $50 off your first month. See you there, Tigers.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. So you have Target dramatically underperforming the market this year, and they're going to get it all back in an overnight session driven by an earnings beat to the tune of $23 to the upside. They're going to pop 16%. 16% at the open, man. Pretty remarkable. And I will tell you, anecdotally, I was talking about this recently, man, that Target, I always, if you watch the program, folks, you know Tommy and I, we love jumping around Target. That's kind of our Toys R Us experience these days without Toys R Us existing. And we're kind of window shopping, though, because, yeah, Target's expensive. We don't got to buy toys every single time we're there. It's just a fun time. We run around. We play with the toys, right? We play with the McQueen toys, Lightning McQueen cars. We play with Spidey, right? We play with all the toys in the toy section. It's a enjoyable user experience. That's one thing Target gets right, for sure. People love Target. They have great brand approval, awareness, etc. But I have noticed recently that they've been competing better on price. I told a story recently that very rarely do I actually go into the refrigerated food section because it's kind of a small section there. Don't have as much fresh food, especially produce. It's not quite on par with even like a Walmart. I usually go to Sam's, stuff like that. But just recently, I found that they had skinless, boneless chicken breast for like $2.69 a pound. $2.69 a pound. If you buy boneless, skinless chicken breasts, folks, you know that fresh, boneless, skinless chicken breast priced at $2.69 a pound is a heck of a deal. And yeah, it's their big package of it, but nonetheless, you can freeze some, you can do whatever. And I said to myself, man, this is crazy. That Target, are they going to start competing on price with the likes of that? And yeah, they are. Even if it's not exactly in that category, they are. And they talk about it in these earnings, that they have cut prices. They've cut prices on some of them being groceries to bring people back in there. Let me see the line they actually got in here, because they do even mention stuff like milk, bread, making sure they're bringing people back in with that degree. Let's see. Where were we? All right, I'll find it. But yeah, they're talking about here back to school, right? Shoppers have sought value. Items like $5 backpacks, 25-cent boxes of crayons. You hear that? That's Target, man. $5 backpacks at Target, 25-cent box of crayons. They're competing on price. So watch out for this one, because I tell you, I noticed it as a consumer. All right? And sometimes you do want to listen to yourself, folks. I'm in Target a lot. All right? I am in Target a lot. I'm always telling my dad I'm watching the shelves. I can tell sometimes when they're discounting heavily. The shelves are 2/3 empty, right? They're making sure they're getting rid of that inventory. We saw all the times that they had earnings where they came in and they had a big inventory problem. Yeah. They started a new low-cost store brand, cut prices on 5,000 staples, okay? Yeah, drawing consumers who said they're remaining resilient. Shoppers are looking for trendy, affordable products. The results further underscore the contrast between companies selling big-ticket items like appliances and those focusing on necessities. Walmart, a competitor that get much of its sales from groceries and staples, raised their guidance recently. And Walmart, they're going to be trading a little bit higher, I bet, today. But nonetheless, in terms of the numbers, what they're getting into here, yeah, discretionary categories improve for 4 straight quarters as consumers prioritize spending on lower-priced necessities over premium offerings. And here it is. Recent price cuts on essentials such as milk and bread also helped lift sales of groceries and other basics. I wonder if the chicken I'm talking about ties into that, right? I wonder if, because I bet it does, because I was blown away. I go to Sam's, all right? I go to Sam's, and I usually buy chicken breast at Sam's. Now, I got to buy like 6 or 6.5 pounds at Sam's to get, I think it's $2.69 a pound, and it's their brand of chicken, but it's supposed to be, hormone-free, organic, something like that, right? But it's their big box of boneless, skinless chicken breast that's got about 6.5 pounds in it. That's a lot of chicken. And so I couldn't believe that when I went to Target, their big box was something like 4 pounds of boneless, skinless chicken breast, and it was $2.69 a pound. Now, it might not be on the same par, but you're still talking about buying Sam's brand chicken breast. This isn't some, delicatessen style thing. Same exact price. I said, what the heck am I can't believe that Target is competing on price for something like boneless, skinless chicken breast for actually a smaller batch of the product. And so I bet it's mattering, man. And you're seeing it playing. Yeah. Now, jumping over to this article in the same deal, because they're talking about Macy's in here as well, but it is interesting in terms of the performance they've had this year and then how it goes. Price decreases help drive more visits to its stores. The company raised its profit goals for the year, was the big one, talking about Target here, okay? I think we will see an incredibly resilient consumer in the face of high inflation and some of the other challenges they've been facing to manage their household budget. That's the Target CEO on there. Comp sales from stores and digital channels operating for 12 months, that's how comp go, rose 2% in the 3 months. Now, they were up against a dream quarter for a comp because a year ago they had a quarter from hell. All right. The company also had the benefit of comparing its most recent quarter to the same period last year when comp sales fell 5.4%, the biggest quarterly decline in 15 years. So they're comping out against a quarter that was really one of the worst quarters they've had in a decade and a half. Okay. But nonetheless, they deliver, man. And I would tell you, from being in that store, these things are mattering. And I'm not the only one picking up on it. Target has a great store experience, right? Versus Walmart. Walmart's got the deals, but you walk into a Walmart, not exactly the most user-friendly experience in Walmart. I know they're trying to work on that too. Target, very enjoyable. And if they can start competing on some of those, and I think they are. Yeah. Most recent, yeah. Look at, even Walmart, right? Excluding fuel, rose 4.2% was their comp on a big one. So it's a big one. We're going to jump to Macy's next. We got retail sales is strong. They talk about Home Depot and Lowe's in there. But nonetheless, pay attention to this one. They've been underperforming dramatically. But maybe this is the beginning of the turnaround. Because we're sitting right now at 143. You're going to pop to about 166. We got a recent high this year of 181. And you're going to get quite a pop on volume. And that high of 181 also correlates to kind of the highs you had out here from late 2022 to early 2023. That high about 181, 183. So you're going to face some resistance in that 180 area for Target. Okay, we'll see how we react there, but you're going to get a pop today, and it's going to matter for target shares. Now, Macy's. On the flip side of that, watch out for Macy's, folks. All right? This thing's going to trade lower by about 10% on the open. There's a drop for you. You came in at 17.74. Yeah, we're down to $1.75, almost exactly 10% on the dot right now. The conference call began at about 8 o'clock. Does not look like things are going well on our conference call, as we've slid from about 16.70 down to $16 right now. And you jump over from Macy's, lowered the full year sales guidance slightly and reaffirmed the earnings outlook for Macy's. Citing challenging consumer environment, said its sales fell almost 4% in the quarter ended August 3rd compared with the same period a year ago. Not created equal, man. I haven't been in a Macy's in forever, and I used to be in there, man. But that's because I got a lot going on. That was a different time before kids. Stay tuned, folks. We're coming back for the opening bell. We got Teddy coming up at 40 past. We got a lot to talk about. Don't go away.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. We got the S&Ps up by 10. We check in on target shares as they open up $23, 16.2% pop on the open. It is pretty remarkable, right? You talk about underperforming the market and you get it all back in one day. There's your daily. We back things up to the beginning of the year. You start at 140, and just like that, we come into the earnings basically flat. And just like that, boom, target up 16% for the year at 166. That is quite a pop, man. We'll see where we go in the open, but you're holding it for a moment. We jump over to Walmart. Yeah, they get a little bit of a lift, man. Walmart's on a tear. Up by 1.1%. You jump over to Amazon. They're up by almost 1% as well. You jump over to TJ Maxx. They're up by 5% on their numbers. This thing, we'll get into that in a moment. And then the flip side, Macy's down by 11%. It is interesting. Where does Macy's fit? I'm just asking you anecdotally, right? And I appreciate the input from Jim talking about, they're just remodeling a new Target, nice atmosphere. Target's got a great atmosphere, man. They do. Now, normally you're paying a little bit more for that atmosphere, right? They're trying to compete on price in this environment, though, where consumers are especially aware of prices in an inflationary environment. But then you get to TJ Maxx, and TJ Maxx doing well. So you have TJ Maxx doing well, Target doing well, Macy's taking it on the chin. Where do they fit, right? Who is going to these big box retailers? And I say big box just in terms of the footprint that Macy's needs. Where do they fit into, Target's every day, Walmart's every day? You have TJ Maxx, the likes of Home Goods, Marshalls, right? Going for a little bit of a discount shopping experience to that degree. Where do we go from there, right? As in, where does Macy's fit in? Who is actively searching out the highest cost goods at Macy's? They have a market, but do they have a market to support their valuation is the question. Yeah, and look at this one. It's dropping on the open, man. I don't know where Macy's fits in. You're down by 11.2% even on the open. You jump over to Target. They give it back slightly right now, and you jump over to TJ Maxx as we get into their numbers, up by 5%. So TJ Maxx raises the full year guidance, 5.6% sales gain for the most recent quarter compared to Macy's, right? Just gangbuster, man. It is interesting here, okay, that the retailer behind this is talking about TJX, okay, TJ Maxx, Marshalls, Home Goods. As they put it in the key points, and I'm not a fan of CNBC, but sometimes they just put out quick data in the mornings, and et cetera, has been taking market share from companies like Target and Macy's. Well, Target numbers are out today. It doesn't seem like they're eating Target's lunch, so maybe everybody is eating Macy's lunch. Just something to consider. Now, I haven't been to Macy's forever. I used to go there all the time. They have a beautiful Macy's, I think in either International or in West Shore. It might be West Shore Plaza in Tampa. One of them has a beautiful Macy's. Used to go in there all the time. Used to get some good jeans in there, some good clothing in there, right? They got a great polo section in there. I love polo, even though it's a little pricey. Ralph Lauren. Haven't been in there in ages. Yeah. Now, I'm a little bit different location, right? I have a child, so I'm not exactly spending as much money on Ralph Lauren shirts, et cetera, as I was when I was a single child with no kids, et cetera. But it is intriguing that where does Macy's fit into how we conduct our daily lives on this occasion? And I'm telling you that I think they got some big problems there. Listen to yourself sometimes, folks. Anecdotal, it can steer you down good and bad paths. But listen to yourself sometimes, because I'm not the only one that's living like this right now. Right? So Marshalls, I love these stores. Marshalls is one of my favorites, man. They got an outstanding store. TJ Maxx, also another good one. And yeah, they're crushing it. So full year earnings, 409 to 313, pretty much in line. The estimate was 414. For the current quarter, they come in 106 to 108. The market's looking for 110 for this current quarter. Earnings for the quarter they just reported, though, slight beat, 96 versus 92, 13.47 versus 13.1. And where's their guidance? Because that's what it's all about. What are you doing for me in the future, right? Excuse me. Let's see. During the quarter, consolidated comp store sales increased by 4% and were entirely driven by an increase in customer transactions, more shoppers coming to the stores. It would make sense if people looking for deals, man. Where does Macy's fit into that equation? Not like they can accommodate people looking for deals. If I would say anything, if you're going to Macy's, you're willing to pay a price for a premium product. That's where they're positioned in my mind mentally. Yeah. So let's see. The growth was primarily driven by TJX's Marmaxx division in the U.S., which includes TJ Maxx, Marshalls, and Sierra stores. I'm not really familiar with Sierra. Familiar with TJ Maxx and Marshalls, though. Those stores were up 5% compared with an estimate of 3%. That's quite a number, man. Home Goods, comp sales up 2%, short of the 3% number, though. Yeah, so TJ Maxx, Marshalls, and Sierra stores, not Home Goods. As of Tuesday's close, the stock was up 21% already. Yeah, this thing's been on fire. And you give it back a little bit, but expectations were sky high coming in. I mean, look at this chart. Look at this chart for TJ Maxx. From $53 in 2002, let's back it up even beyond that. Look at this thing, man. It's been all one-way rocket ship from single digits in 2009 up to $120 right now. And yeah, you got some volatility in there. There's your COVID spike lower. You came into COVID at $60. We're trading at $120 right now for TJX. Quite a run. Let's check out some of the FANG stocks, see how we're trading. Amazon, they're going to be helped out by some decent numbers from Target, decent numbers from TJX that we just went over there. Amazon up 1%. Walmart, yeah, they're helped with Target numbers, of course, up by 0.75% right now. We jump over to Apple, the big dog, basically flat, 226.41 right now. Microsoft, they give it up on the open a little bit. Look at that. Microsoft was at 426. We're trading 423.69. Google shares slightly in the red as well. NVIDIA, can't hold NVIDIA down ever. Up 0.5% for NVIDIA. You jump over to AMD. AMD up by 0.5% as well. We check in on the dog of the industry, Intel. Be careful on this one, folks. I keep saying it. Intel up by 1.1%. Another one to be careful of, Tesla, up by 0.5% so far this morning for Tesla shares. All right. Let's see how the dollar is kicking things off this morning. Dollar hanging around about 101.41 right now. We check in on yields. Yeah, 10-year sitting right at about 3.8%, and we keep our eye on gold right now. Gold, 25.45, and we're going to be talking some currencies with our man Teddy Kegstack coming up next. A quick peek at the dollar at 101.41, and the S&P's up by 11 points right now. And where do we jump to? Where's the focus? We'll slide it up. Friday. Powell confronts policy crossroads with all eyes on Jackson Hole. So what they say in here basically is that we're going to get the jobs report for August on Friday, September 6th. Okay? The Fed has their meeting just less than 2 weeks following that, September 18th. That's going to be an important Friday, folks. Friday, September 6th. It's going to be an important one. Jobs number comes out 8:30 on Friday. And what happens if we get a dramatic slowdown, right? Well, the case could be made. Do they need to go a little bit quicker in the beginning at least? And they need to bring it with 50 versus where we are in September. And when you look at where we could possibly be in September, okay, the market is pricing right now about a 2-to-1 chance that they're probably going 25 basis point cut. But there's a 1 out of 3 possibility that they go 50 basis points right now. Yeah, that's quite a number, man. But either way, the market, by December, yeah, you're pricing in that we're going to be a whole full percentage point basically lower. Cuts are coming. That's what the market thinks. We'll find out. Stay tuned. We're coming back with Teddy, folks. Don't go away.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&P's up by 11 right now. You jump over to the dollar index, dollar trading lower for the general recent times, man, all the way. We got a 101 handle in the dollar right now. And as we do each and every Wednesday, folks, we're going to jump over to our man, Teddy Kegstad. And, folks, you can check out Teddy's outstanding newsletter, the Tiger Forex Report, right under the newsletter tab. You can check that out. He comes out with new issues every week. It's $97. You get a 30-day money-back guarantee, as we do with all newsletters. Check that out. You get some archives of his webinars as well. And if you want to check out a couple great webinars he's done under the Services tab, Capitalizing on Time, with calendar stock option spreads and Japanese candlestick pattern stock and option strategies. Teddy's written a great book on candlestick patterns as well, but both of those over there under the Services tab for $97. You get those, you archive them, you have them as long as you want, you watch them as many times as you'd like. Teddy Kegstad, we live in interesting times, and we are always talking, it seems like, on interesting days with some movement. Good morning.
Good morning.
So we got the chairman on Friday. Everyone's talking about, of course, in Jackson Hole. But, boy, we've seen some moves, man. We got the 10-year yield now sitting at 3.8%. The market seems like it's screaming for some cuts, and that putting some weakness into the dollar. Where do you want to kick things off, man?
Well, we can talk about the dollar. We can talk about crude. Since we're started the dollar, let's start with that.
Let's do it.
Obviously, a nice follow through to the downside this week. The dollar index started to really get pounded on Monday and Tuesday. Today, it's relatively quiet, set a lower low from yesterday. It fell down into our downside target zone yesterday and settled in it. So that's a nice support area where we're trading at right now. Yes, we have Powell speaking on Friday, so I think you're probably going to see a lot of sideways. You may see a little profit-taking bounce in the dollar, actually, I would think, today, and into his speak on Friday, whatever he's going to say. And I think it's going to be more regurgitation of what we've heard recently. I think one of the things that's really going to help to push the rate cut thing is that the Department of Labor, over the past week came out with revisions for 22 and 23. So there's actually more people unemployed than we thought, but they don't count anymore because they're off the number because they're from 2 and 3 years ago. But they adjusted those. So unemployment was worse at that time than the market was told. So I think that's going to be factored into it as well. And I think the market has reacted to that and already bid it up. So, I think you just have to basically watch the inflation numbers. As long as they stay on a month in, month out basis at a pretty smooth pace like they have. And remember, it doesn't mean inflation's gone away. It's just the accelerator's gone from 90 to 85, So, that's really the environment we're looking at. I've been saying they want to juice this for the election. I think they're going to do it, in September, and then we'll see as far as how aggressively they go. I think if they go with a half point right off the bat that screams to the market that they were behind the curve and they were way too late to the party once again, then that could probably give a nice little cut in market yields in the bonds, meaning higher prices for a little bit. But I'd be cautious, remember, because right now we already have at least a half a point factored into the market. And what is the most that they're going to end up cutting overall? If they do a point, the reality is everything, like I said, been saying for a long time, everything they do is counterproductive to what they're really trying to do. By cutting interest rates, they're going to actually accelerate inflation into next year. No matter who's president, they're going to have to deal with accelerating inflation just by those moves. And once again, I think it's going to have a ripple effect in the real estate market as well. Everybody's used to this. Oh, interest rates should be at zero. Well, no, they're not supposed to be at zero. They should be actually higher than they are right now. If anything, we should be pulling back to where we are now, and that's if we had a critical situation in the economy. We don't have any room to go. Remember, we had these conversations a couple years ago when we were at almost 0% interest rates, pushing negative interest rates. What do you do when all of a sudden there's a calamity? So, and that's something I think you have to take into account. I would say that right now, until they actually pull the trigger, I think you're seeing the toppiness in the bond market in the 30 year and the 10 year. I'd be cautious buying into this until they actually pull the trigger, unless the economic numbers. Now, I'd be very cautious with those. If those are ticking slightly down on month, not necessarily year over year, because that's something that we have seen, is that we've seen month over month a nice little reprieve somewhat in inflation since they've discounted everything. They don't put out half the stuff that needs to be in there. So, these things you have to take into account. So we have a nice trend going in some of the markets. Remember, though, the euro right now is trading right below the high from December 28th of 2023. So we would be making a multi-year high if we take that out in the next couple of days, or even today, we could possibly do that. But I'd be cautious being long above there, because until we cut rates, there's not much more room to the upside. Remember, the euro has been basically in a $4 range trade for the past since then. So now we're at that extreme where, once again, they were talking about cutting rates last Christmas. Now we're in front of Labor Day is coming up in a week and a half, So, what does that tell you? The market it's been stuck in that range, and until they actually pull the trigger, there's no reason for it to trend out of that range, is what I'm saying. So I'd be looking to buy dips, definitely against the dollar and against, the yield, but I'd be very cautious, buying into these highs or selling into these lows until the trigger gets pulled.
Nice. I was jumping around those charts as you were talking about it. It is pretty interesting. The euro, that's quite a well-defined channel range. We've talked about it. And it is interesting. The dollar index, for all the volatility, we're literally right back to where we were when we kicked off the year, which is crazy. Right. We're 101 and change, and we almost made it up to 106.50 or something like that in the middle of the year, and we're right back to where we were at the beginning. And
we've done it in 2 months, Tommy. We've done it in 2 months.
Yes, quite a drop-off from 106 to almost 101. I agree. We know how quickly this market can change its mind in terms of cuts or no cuts or what's coming down the line. You make some great points with what's priced into this market. I want to ask you what you think. So we get the 10-year right now at 3.8%. We were as high as almost 5%. So the 10-year's dropped 1.25%. The Fed hasn't even moved yet. Where, I find myself trying to figure out how far can the 10-year go right now when there's already so much priced in. Do you think about that? I'm sure you do. You mentioned it, but
absolutely.
How far can when you make it can't we shouldn't go back to zero, because for the points you laid out, it's not how it works, and you need some ammunition if things really go bad for the Fed to have some room to stimulate the economy. But for myself right now, I'm saying, but there's already so many cuts that are priced into that 10-year right now, man. There's some real risk. When I look at 3.8 and I say to myself, okay, what's the possibility that we go to 3.5, or what's the possibility we go back to 4.1? I say maybe we get a little bit of a reverberation. That's my own market bias. But what do you think about that conversation when you look at it that way?
That's exact, and that's like what I was saying right now. Until they pull the trigger, we've hit that extreme, but that other half a point, let's say they do a full point over the next 4 meetings, 5 meetings going into next year or whatever. Half a point's already factored in. So there's not that much room for bond prices and 10-year prices to go up. I think there's still a little bit of a trade there for sure. Once they pull the trigger, you'll break out of that range, and then we're going to shoot for that total of 1 point from when they were, on pause. And so I think you have that much of a move to go yet. But I'd be cautious up there for sure.
Can we talk crude? Can you hang with us and finish up with some crude after the break? All right, stay tuned, folks. We'll talk a little bit of crude. Crude right now trading at 73.55. We got markets in positive territory. Stay tuned, folks. We're coming back to finish it up with Teddy.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps holding on to the gains, up by about 13 points right now. We're talking to our man Teddy Kegstad. Don't forget to check out his outstanding Tiger Forex report, folks. You can check out the news, the webinars he's got under the services tab, and we're going to finish it off with a little bit of crude. So, Teddy, we're testing the lows we had early this month. We're back to the lows we had in June. We're pushing about $72. We're trading at $73.63. Quite a drop-off from $80 not that long ago. What do you think about this crude market, man?
Well, I think we can continue our conversation where we left off last week. Last week when we spoke, we were talking about how that previous Monday and Tuesday we had double topped right up against our critical resistance band from the Tiger Forex report. Remember, I was talking about how Wednesday and Thursday's trade going into Friday, if they could get back above those highs and close above 80, that would be a bullish breakout sign and probably indicate higher prices. If not, those highs were the directional bias. We never got above those. We actually continued lower, and now we fell into yesterday. We settled into our critical support band near those lows that you're speaking about. That's key support there. I think that it's going to be very tough to get below there unless we have any real driving fundamental that would do that. You know, I can't foresee what that would be right now, especially you got all the kids going back to school and stuff like that. I'm assuming demand for gas and stuff like that is going to at least be somewhat stronger over the next month or so as we come out of summer into fall. And I like the support area where we're at. I think maybe we could be in a nice range between 72 and 80 going into the election. Once again, though, if we get above 80, that would be a huge breakout sign. I'd be very cautious being short above there, especially if we get in a couple days of closing. But we're almost $10 away now, which is nice. But like I said, as far as going to the downside, I'd be very cautious now. Now I think you're at the point where you might get caught selling in the hole, especially if you get below these lows.
I appreciate the take, man. It is pretty remarkable looking at this thing, just how we've been shopping around between about $70 and maybe 90, and well off the volatility we had in years past of the 100, et cetera. So we're just in a little bit of a range, maybe. We'll see. Teddy, I appreciate the time,
we want to end on the yen real quick. One last little look.
Yeah, do it. Let's do it for sure.
It's getting a little bounce right now, but otherwise, if crude doesn't get a bounce, I think the yen has a chance to get a little bit lower yet, especially with the yields going down.
I like it, man. Thanks for fitting it all in. Great information as always, Teddy. I appreciate it. Have a great week. We'll talk to you next Wednesday, man. Thanks so much. Folks, stay tuned for Basil. Appreciate